Hey there, Cherry Bombers. It's Wednesday, December 8th, 2021, and I have another trade here. Of course, you're my Cherry Bomb people, right? We have a Cherry Bomb trade for you today from Tasty Trade. It's how do you feel about emerging markets? This trade befuddles me a little bit once again. We're in the weeklies, which has the strike that we're looking at has zero open interest. It's wide bid-ask spreads, even though it's a liquidity rank of 4 out of 4. The IV rank, as you can see over there in the top right corner, is a 47, so it's definitely a short premium candidate, and we're at a short put. So sort of naked, undefined risk, but sort of not at the same time if you know about short puts. So let's get today's trade going, shall we? Hi, everybody. My name is Neil, and this is Option Theory. You can see we are inside of Thinkorswim's simulated trading, so we can get all the learning without any of the risk. But when it's time to risk your real dollars, you have a whole bunch of experience under your belt. I hope you'll join us as your trading partner by hitting that subscribe button. And that is my pitch. So let's get moving on. Let's go to the chart here. We can see some back and forth action, which I guess is good, up and down, right? If you time it right, and that's always the trick, but nobody knows anything. If you could see here, that we're down, we're up, we're down, we're up. This looks like a down. Hopefully we're on our way up, but how high back up will we go? Will we stay above where we need to? Not really sure. Um, but hey, probabilities are definitely in your favor with a trade like this. So let's go to the Analyze tab, go to Add Simulated Trade, and explore the trade as it was sent to us from Tasty Trade. I'm going to bring my microphone up here a little bit. I bet that sounds better now, doesn't it? So we're looking at January 14th weeklies with 37 days to expiration today, though personally I find the January monthlies with 44 to be the more compelling strike to go at. Not strike, expiration to go with. So let's click on this little chevron or arrow to open that up and scroll down to the 46.5, where we can see here we're at the 20 delta with a whole whopping 0 open interest right now. And, we're at 18 cent wide bid-ask spread, which is surprisingly better than the monthlies on the bid-ask spread, but open interest is way worse. Let's go ahead and click this and say, let's go up 9 cents on this one. Okay, that's 9. And then let's go, that we're at one contract, go to the risk profile and analyze this trade, check out its probability at expiration. Set the date in the top right corner here using this little calendar option to the same date you see in blue here. That's January 15th, 2022. And let's set our price slices right here by clicking here, choose set slices, go to break even and choose the same January 15th. That moves our goalpost, as I like to call it, to where that blue line crosses the $0 x-axis and gives us our probability of profit at expiration of 84.2%. So there's an 84% probability that you'll be able to make at least $1, right? But if we wanted to, we could slide that to right here and say there's an 80% probability of getting the whole $52. Yes, $52 is your maximum profit on a trade like on this trade, assuming we get the mid price here. Now, if you're like me and you want to at least explore, well, what if I wanted potential, better liquidity? Allegedly better liquidity. Let's go back to Add Simulated Trade. Let's close up these weeklies. Let's go to the monthly, January 21st. Same strike. How about I just grab this instead of using my scroll wheel? And there it is, 46.50. You'll see we're a 25 cent wide bid-ask spread, which is less than awesome. But we have 2,000 open interest. Here's one with a lot more open interest. This is more my speed. The 46 here. In this case, we have a slightly lower delta of 19 delta, way more open interest, and we have a 12 cent wide bid-ask spread versus the 25 cent one. And it would be, easier to probably roll with the even rather than a 50 cent strike here. So I'm going to go ahead and click this one and say that we can go up 6 cents to 56 cents. And for a mid price, let's go to the risk profile. Let's set our date in the top right corner to the new one, which is January 22nd. Let's set our price slices to break even. and we're looking at an 85% probability profit. What I also like is the goalpost is outside of the expected move. And with a delta of, what was it, 19, we're looking at a 38% probability of touch that's somewhere in the next 44 days that this little tan line, which is where the stock price is right now, will test that short strike. I like that trade a little better. How do you feel about those two trades? I'd love to hear from you which one you prefer, the monthly or the weekly. You can leave me a comment down below, just say monthly or weekly. Love to hear from you. And going to right click this trade and choose confirm and send. You can't see that, so just give me a second. There it is. Now you can see that little window right here. We're looking at a $56 maximum profit, a maximum loss should the emerging markets just go away. There it is. $4,500 is the most that we. Now, I know some of you, like me, may not want to potentially risk that much. Therefore, a defined risk trade might help you sleep at night. Of course, you could go ahead and just buy some protection, maybe make it a $10 wide, and really reduce that capital required for this trade here. In this case, we're in the margin account, so it's going to require only $500, or call it $600. It would require the full $4,500, $4,600, let's call it, in an IRA account. I'm going to go ahead and hit send. That goes into my working orders. I'm going to close up this so you can see everything here. All right, friends, that's it for this video. Big thumbs up to you for making it this far. If you like this video, there is a thumbs up button for you down there as well. And of course, if you haven't subscribed yet, hopefully you will someday. And until then, may the market be with you.